What I'd like to do is talk about really what has been happening in global and African trade over the last 18 months, the kind of challenges it's thrown up, but also some of the prospects, some of the things that we should be looking out for as we go towards 2022. So the first thing to say is that world trade is recovering to a certain extent. The last time I was presenting for Echo Bank a year ago, trade had just slumped to its lowest level on record back in the second quarter of last year, which of course was one of the worst times for COVID. Since then, it surged to a peak of 110. That was really, if you like, the kickback after so much pent-up demand. It's currently roughly on trend, almost at 100. And that would suggest that ultimately trade more or less is growing as it was before COVID started. But of course, so much has been shaved off a lot of trade all around the world. There's a lot of disruption out there. And particularly one of the issues picked up by the WTO is this lack of semiconductors and electronic parts. It's holding back automotive, it's holding back electronics. And with Christmas coming, the odds are that for reasonably priced electronics and smartphones, it's going to be hard to find them. And then the other big issue, which has really impacted this year, is supply chain disruption, and it is continuing. There was a big issue with lockdowns in places like Thailand, Vietnam, China, that a lot of the manufacturing capacity suddenly stopped when you didn't have workers there. That had huge impacts. But then also there was the big issue of the Ever Given ship, which got jammed in the Suez Canal. That shut business for perhaps 12 or maybe 14 days, and it meant hundreds of ships had to be diverted. That led to huge increase in costs and disrupted many value chains, because a lot of value chains in the world are always about just in time. And the trouble is, the moment you start adding months to these value chains, you get chaos. And then, of course, we also had the shutting of several Chinese ports at different times. And of course, that caused huge amounts of trouble when you can imagine that maybe 40 or 50% of certain goods are coming through these ports in China to the global market. That is continuing. There's an expected crunch at Christmas and for Thanksgiving, but we'll have to see. Ultimately, there's a response going on in the market, but this has been because there's been so much pent-up demand. And then there's this big issue about food prices, and they've been accelerating everywhere in the world. It's been noticeable here in the UK. I know it's happened everywhere else, but the food price index is considerably high. It's at the highest level it's been actually since the last kind of peak of commodities boom, sort of 2008 to 10. And those cereals are sort of more or less on a par there. Oils are particularly high up as well. And this has a huge impact because particularly when it comes to the import bill. Food imports now, this recent report from The Economist shows that they're actually growing much faster than GDP. And so if you look on the right there for the world, you can see it's going significantly faster. In developed countries in the middle, it's more or less in line with GDP growth. But look for developing countries there, many times higher. It is growing imports, and that puts on huge pressure when it comes to the current account and to the trade account, and that's something I'm going to look at in a moment. So why don't we talk about the elephant in the bedroom? I think it has to be talked about, which is COVID, and to say where are we? I took this snapshot a couple of days ago, which is from the website Africa Data Hub, and essentially it shows you this is exactly where we currently are with the pandemic. You can see that currently, in the current status in West and Central Africa, it is noticeably receding the amount of infections. And you can also see that in East Africa, particularly Tanzania and Southern Africa, they are continuing to rise and rise quite quickly. And the thing is, the impact has been all over Africa and it's been very different. I think one general point to make is it really does seem that COVID is not as virulent and doesn't impact the African population as hard as it does, let's say, North America and Europe. And there could be many reasons for this, quite a few of them to do with climate and the fact that here in England, we hardly ever see the sunlight. But at the same time, it's very unclear exactly why it hasn't transmitted or hasn't had such a hard impact. And I think countries like South Africa, they really felt the impact. They had a very severe lockdown. Other countries, it was lockdown light, or it was much more about social distancing, wearing face masks, which is becoming standard. So look, we're all living with COVID. I just think everyone is just very unsure how it's going to play out. And I think that's the only thing you can say for sure about COVID is that we're unsure. And then when it comes to the impact, as you know, what has this had on GDP growth? Well, this study by the African Development Bank, I think, is very interesting. It shows how the impact on GDP has really varied. It just really depends which country you're in. So if it's very severe, the lockdown, you get quite a sharp drop in growth. And you can see that for countries like South Africa and Botswana there and Lesotho, which are all at the bottom. But other countries which allowed actually a much kind of lighter lockdown stringent sheet like Tanzania has actually seen, you know, some GDP growth during 2020. And I think that caused actually a lot of resentment in East Africa as well about the spread of the disease. But I think everyone recognizes that impact, and everyone wants to try and avoid such a difficult impact again, or such a crunching lockdown if numbers do start rising again alarmingly. And then there's this whole issue about what impact then has it had on the trade account. If we start by looking at African exports, they have fallen sharply. And it's unfortunate because Africa was in a difficult position even before COVID. You can see the period from, let's say, 2013 down to 2016, that they were already starting to fall. But then also they started to rise again, 2016 to 18, because there was a pickup in some commodity prices and global demand. But since then, in the 2 years since COVID, we've seen exports fall by 25%. And that means they're a third below where they were 10 years ago. That is how much COVID has put Africa back. Unsurprisingly, the biggest drops in exports have been mineral and hydrocarbon exporting regions because of drop in demand, but also drop in prices. So we see Southern Africa down a third, ECOWAS down a quarter. And yet the interesting contrast there, if you look at it, is the EAC. EAC exports are actually up 18%. And I think this really does go to show in the hard numbers how the EAC remains a very important trading hub. And there's a lot of goods which come in and out of East Africa. And that's why we've seen the exports have actually increased over this period. Although if you look at them in terms of the size compared to the rest of African exports, you can see how massively the commodity exporters of SADC, ECOWAS and North Africa really dominate the export picture. And then if we look to the imports, as you'd expect, they've also fallen because there's been such a drop in demand and there's been a crunching closure of value chains. But I think what we can see here is that they haven't fallen as fast, only by about 15%, and mostly led by SADC and North Africa. But interestingly, again, for the EAC, not as many, only a slight fall for imports, because again, a lot of the imports are feeding the value chains in that region. They basically couldn't stop. But I think one of the things which is very telling here is how the import bill for ECOWAS has actually grown over this period, over the last 2 years, by 20%. And I think that really shows how heavily dependent the region is on imports of, you know, everything, but specifically food, but also a lot of electronics and fuel. And clearly it has the ability to finance this, but this is actually, they're going in the opposite direction from the rest of Africa. So how does this all translate into the trade deficit? Well, essentially it's widening again. You can see here from the chart back in 2011 when they first joined EcoBank, Africa was actually in quite a nice surplus with the world. But the deficit, which is the black dotted line there, actually got down to a nadir of 113 billion. It was improving before COVID, but it has since basically turned around again and is approaching record levels. And what has really driven this, if you look at the lines there, is ECOWAS. The green line there, the ECOWAS exports have been on a steadily declining trend. A lot of this has to do with prices and also the dominance of Nigeria in the ECOWAS data as well. But the rest of the regions actually have done sort of okay on that front in terms of the trade deficit. So Africa is definitely in deficit, but it really depends on the region you're talking, because several of the other regions are actually in a small surplus. And debt is the other big issue I just want to touch on as well, because I think there is some concern rising here about the levels of debt and how sharply they've risen. We've seen fiscal deficits in Africa double to 8.4% of GDP, and we've seen the debt to GDP ratio increase from around 60 to 70%. So we've also seen this real shift away from traditional lenders towards private and commercial debt. And we have a dangerous bubble potentially here, which is growing up. I mean, if you look there at the chart on the right, you can see what used to make up countries that were in distress or with high distress or even moderate distress. That is nearly all the countries on there now. There's only 2 countries in green which are considered low debt distress. So you've got 6 African countries in debt distress and 14 at high. And the fact is, quite clearly, when you look at the numbers, a lot of these countries are countries which were either tourism or resource dependent. And that really had an impact on their ability to repay. And this is something which is being looked at right now by all the DFIs and institutions. And then there's the question of Africa's trade finance gap. And this is something we'll be discussing very shortly. But I think the big issue to understand here is that the gap is huge and it remains huge. I've heard all sorts of different estimates, but it's somewhere in the region of $120 billion a year for Africa. It could be higher. The important point here for me is actually the chart on the right. It just shows how little trade finance actually gets to traders. And if you were to look at the pie chart from the point of view of SMEs, they probably get much less than 25%, maybe even 10% of available finance actually goes to SMEs. And that means actually goes to women, because most SMEs are run by women in Africa, certainly the smaller ones. So there are multiple reasons for this. We're going to unpack them a bit. A lot of it is to do with collateral requirements, asset credit worthiness, but also this question of the balance sheet limits of correspondent banks. And that is a really big issue, which maybe we'll touch on. Ultimately, something has to be done to plug this gap. And that's part of the reason that EBISA exists in the first place. And then we shouldn't forget, we have the AfCFTA, the Africa Continental Free Trade Area. That came into force in January this year, and it is going to be a long process to knit all of this together, but there's no reason it can't be done. And if you look at this map here, that shows you the progress towards countries which are deep green, have signed and ratified, a darker green signed in March, not yet ratified, and even light green almost there. The only standout at the moment is Eritrea, though I understand they are talking about it as well. But there's a really good chance that we could see all of those ratifications going through in the next year to year and a half. There'll just be certain key countries like Nigeria, which you could say would be the clinches. There has been periodic disruption of the value chain because of COVID, but the truth is we're seeing integration going ahead. And the big opportunity I see here is first for legalizing informal flows, which are billions and billions of dollars. That gives the possibility for a lot of SMEs to actually start professionalizing and start formalizing and actually needing proper financial services. But there's also the opportunity to really stamp out a lot of the fraud, a lot of the abuse in the value chain, particularly a lot of commodity value chains where you have middlemen who just don't bring any value. I'm not talking here about facilitators, I'm talking about institutions and interests who are in there and are simply making a rent, but not contributing anything to the value chain. So I think with the removal of tariffs, the removal of borders, certainly from a commercial perspective, there's this opportunity for the cross-border value chain. And that doesn't really exist in Africa. If you think of the idea that you could have fresh tomatoes in Nigeria, they could be packed, they go over the border and they're processed in Niger or Cameroon or somewhere else and consumed in that market. To have that kind of freedom to know that you can move over the borders, that the payments can be made, that there's no issues there, so the produce doesn't rot. Utterly impossible or almost impossible in Africa now. If you can start building those sort of things because you know you have removed the borders, that is basically how the whole area will be integrated. And it's a huge opportunity as well in terms of financing and for business. And then the other thing to talk about when it comes to digitalization, and we will be touching on digitalization, is this whole question of e-commerce. And it really is flourishing across Africa. And it's not surprising because we have seen so much digitalization going on in the world. There was a surge in the number of people who started having mobile phones in Africa during COVID. Last year, for the first time, statistically, more of the adult population had a phone than didn't. And that number is changing. It's soon going to be 2/3 have a phone. And so on the back of this, and the fact for many businesses that they were simply unable to operate except digitally, we've seen e-commerce growing. And this is an interesting map from Brighty Bridges, shows over 250. This was just around the start of COVID. I wouldn't be surprised if this map has doubled in number now, because of course, all you need is a mobile, WhatsApp, maybe a website. I don't know, with WhatsApp, it's enough. You can run a business. And so we've seen SMEs from the simplest up to some quite sophisticated getting into the e-commerce space. And we've seen some of the big names as well, like Jumia and some of the international car rental agencies, for example, the African ones really expanding. But we're only just beginning here. And the reality is there is so much to be done when it comes to embedded payments, everything to do with finance. And this is something I think that Isaac and probably Sebastian will be talking about too. But the key point I just want to make here is there's still a long way to go with digitalization. I wouldn't want you to think that I'm just starry-eyed about fintech. It's going to solve everything. This is the reality. I mean, these photographs here are from my time at EcoBank. So like over the last 6 or 7 years, you can see it was before COVID. No one's, you wouldn't be allowed to get that close to everyone there. But you can see this is markets in Ethiopia, in Ghana, in Togo, in Lomé, in Kiminronko market, in Kigali, and also bottom left there, which is quite interesting, the Tudu market in Accra. You can see there, I managed to snap a picture through the window when I was being taken to the branch by EcoBank, and those guys are Susu. And we reckon they had something like $40,000 in cash in cedis, and they were doing just one run, and they do multiple runs a day. They're essentially the simplest bankers in the world. They look after the money, give it back to you later, minus a small fee. But that just shows you how much cash that there still is. Now, things have obviously changed with COVID. There was a lot more digital payments, but it's not just about putting a phone in the hand. There's ways of doing business. And remember, if you can't get a signal, even in Tudu, I couldn't get a signal on my phone. I can't do a mobile payment then. I'm still going to want to go back to cash. So there's a lot of things to still overcome, but I'm sure that the wave of digitalization, the pressure for it, has probably changed the picture a bit when it comes to some of the SMEs. And I think they're much more open to digitalization now because they kind of have to be, because their clients are, even if it is micro digitalization. And then the other thing I just want to talk about to finish on is this big rising question about compliance, because we've just had COP26 here in the UK. It got a lot of press, but to tell the truth, compliance standards have been tightening for a long time. We have just seen the big media moment when everyone pays attention to it. But there are a lot of very significant laws which are being developed now, which have huge implications and pretty soon for all of Africa's value chains, everything to do with the commodities going through them, how they're produced, how people are treated in the value chain and the governance of it. And look, here are 3 examples of ESG, which is stepping in. We've got the UK is drafting legislation that will ban imports that are linked to deforestation risk. And in fact, they're also talking about all agricultural products, which would include cocoa as well. California has almost done its California Deforestation Free Protection Act. That is just as stringent as the UK. The EU is drafting a law that says any product that is linked with forced labour, child labour or biodiversity loss will be banned from entering the entire EU. So these are policies, these are guiding documents and legal documents, but the implication is huge that all of the value chain has to get more sustainable. And to do that, the bottom line is you have to prove that you are sustainable. And that is the most difficult thing. As you know, with KYC, AML, the business of actually being able to tick all the boxes and see that you are fully compliant is extremely difficult, and you need to automate. And the same goes for ESG. And so I think where there is a real opportunity here for banks, and particularly anyone working in the value chain, is what the next generation of tech can offer. Because there is a deluge of data, and this can start giving you these insights that you really need, that you can manage the risk, and you can start integrating ESG into your risk management and into your investment strategy and the way you do business. If you just take drones, like the top left there, you can see that is in Kenya. They can constantly check on the crops. They can decide exactly the right time to spray if you need to. If you look top right, what you can do with data visualization. That visualization in the top right is of a protected forest area surrounded by legal cocoa plantations. And the different colors there, the light green is that mixture of agri-forest cocoa. The darker is purple is just straightforward cocoa cultivation. But what's interesting is if you look at the map there, they use something like this. This uses all sorts of different data, GPS data on the farmers themselves, satellite data, LiDAR data. It crunches it all and produces this. And I think the thing you can say if you look at that image on the top right is they are protecting that forest area. There has been a slight encroachment, you can see that, and that's something that they could go in and specifically say to the farmer, this is the place you shouldn't be. If you can give that information to the local community, you can literally stop this thing in its tracks. And it's not about saving everything, you can't, but you can know with this kind of data, the moment someone starts chopping down forest, you could get there within a few days, rather than discovering 6 months later that 10,000 acres is gone. And then when it comes to tracking through the system, it's amazing. And this digital fingerprint recognition, the bottom right there, this is used a lot now in the agricultural value chain. And it means if someone turns up to, let's say, sell their cocoa, we're not dealing with any kind of paperwork or cards, just fingerprint recognition, that's you. It might be you could do it with eye recognition as well. That means the farmer's in the system, and anything they do, it's all linked to them. But if you do link it up with other things, it gets very powerful. If you look at the bottom left, that's something that I saw in Cote d'Ivoire a couple of years ago. You have a weighing scale there. The farmer puts the cocoa on there. He has already registered himself with his finger. The scale weighs it. That data is automatically sent to the PDA of the person who's working there. And then she scans the barcode, which is put onto the sack. And that also is linked to the farmer. And that means you know exactly what it was, its weight, who the farmer was, and you can trace it the whole way through the value chain. So there are so many things, if you think how you could take this data and use it to manage your ESG risk. You can really think about how we're going to get hit here, where are the real violations going on, can we show that level of transparency? These kind of tools can help. But of course, they're tools, they're not panaceas. Used well, I think it will make it possible for institutions to do their very best to meet these kind of requirements, which are literally just coming around the corner.